Hello and welcome back to Mind-Free Trading. Are you looking for a simple day trading strategy that you can apply that doesn't require any complicated indicators and focuses on just pure price action? That's exactly what I'm going to show you in this video today. My name is Emily and I've been day trading for over 5 years now. I originally started day trading the US stock market, and since then I gravitated towards day trading Forex 5 years ago. In 2024, I successfully passed a prop firm challenge with the prop firm The 5%ers, accessing a $40,000 account size, and I am currently undergoing their high stakes program that I will talk more about later in this video. This week, I managed to bag 3 times what I was risking for the trade, trading my $20,000 account size. And this is day trading a very simple strategy whilst juggling a very busy lifestyle. I am currently pregnant and I am a mother to 2 children under the age of 4. So I don't have a lot of time to sit on the charts and trade all day. In fact, I mostly carry out my technical analysis at the weekend and on evenings, and I trade from my mobile phone on the go. So if you are looking for a simple day trading strategy that you can trade around a busy lifestyle or around your work, keep on watching. Please remember to like and subscribe to my channel. All of the software that I will be using is linked in the description below. Let's jump onto the charts. Before I jump onto the charts and break down this simple day trading strategy with you, I'm just in my broker here in MetaTrader 5 so that I can show you the data from the trading week so that you know these are real trades that I took in the real markets. I was trading just pound dollar, that is the major Forex currency pair that I focus on. To begin with, I took a small break-even trade and then I took 2 winning trades. I wasn't going to trade at all this week because it's half term and I've had both of my boys full time. But I saw the opportunity and I managed to squeeze it in, managing the trade on my mobile phone. So I'm quite happy with the $300 profit, considering I wasn't going to trade at all. As I'm recording this, I am using my Mac. I am usually a Windows user and I have recently bought a Mac, but I'm having to go through quite a big learning curve with it. So if I seem a little bit clunky, that's what that is all about. So here is the trading data, the price charts for pound dollar this week. And looking at this at a glance, I think that you can all agree that it has been in a beautiful downtrend. We opened up at the start of the week here. We had a little tiny pullback to the upside, and then we've just made this really nice steady trend lower. Now, the strategy that I'm going to share with you is a trend continuation strategy. So this is a strategy that works really well in a trending market like what we are seeing here. Although I'm on the 15 minutes, you can go on the daily if you prefer to see the daily candlesticks. Sometimes they can give you a lot more clarity. The daily is definitely the high authority time frame, but you can get information from any of the price charts simply by zooming out and seeing more candlesticks or less. For example, this daily right here is what we were looking at just now on the 15-minute time frame. So I took the trade on Thursday the 30th of October. I will remove those candlesticks using this handy replay tool that TradingView offer. If you've not used TradingView before, they have some incredible offers coming up for Black Friday week. You can get up to 70% off usually. So if you haven't done so already, I certainly recommend trying out their free trial because you've got a few weeks to get used to the software to see if it's right for you before you have to commit to buying it during the Black Friday week when the offers are on. And there is a link below in the description if you want to check out TradingView and have a go for yourself. Looking at the macro perspective for pound dollar, we've actually seen to making this really beautiful double top pattern. Price has been coming up. We've got these key structural points here. We made a double, the first sort of point of a double top, pull back down, the second point that couldn't break the first, and now we seem to be breaking down here. Couple of pullbacks, and then this week we've had this strong drop down. I'm watching this area here that I've drawn out as something that might fall into, that is using the Fibonacci retracement tool from this key structural point down here. That marks out these 3 areas of optimum trade entry, which I prefer to use the rectangle to mark out. So for this, I'm basically watching to see if the daily falls into this. It may just kind of come down here and then it might find some kind of resistance, maybe something like that. If we get this kind of pattern, it could be an area where we see the reverse and a continuation of this uptrend, but of course there's always every chance that it'll break this level and trend lower. That's a macro perspective. From an intraday perspective, at the moment, obviously on the daily, we are coming down. We're breaking the previous daily lows. We're making strong candlesticks to the downside. It's a perfect opportunity for trend continuation strategies like the one I'm about to share with you. Now, I know I said at the beginning of the video you don't need any complicated indicators. However, there is one indicator that I always like to use. In my opinion, it's not really an indicator. It just saves you time drawing the tools on yourself on the charts, because all it does is it shows you two lines representing the previous daily high, this one up here, and the previous daily low. You can do this manually yourself by drawing them on, but I prefer to use the indicator to save me the time. I don't have a lot of time to do things that I can use shortcuts for. On the Thursday morning when I took this trade, I woke up early, probably about 5:30 or 6, around about the time my boys were surfacing, but I had a little bit of time before they got up to look at the chart and see what was going on. Now, there wasn't any major news coming in, so I knew that it would be a technical based day. And looking at the time frame here, all I'm looking at is the previous daily data. And on the previous daily data, which would have been Wednesday's data, we had some significant things happen. We had a strong bearish close. We're coming down. We closed below the previous daily low, which was Tuesday's low. Price pulled back, it retested it beautifully here, and it made a very strong low. So on this kind of daily perspective, we've already had a break of the previous daily low from the prior day. We broke Tuesday's low, we retested and we closed lower. And on the current day, on the Thursday, although we are currently trading inside, we haven't broken Wednesday's low or high. I knew that we were coming up to a point where we were retesting a trend continuation from the day before. And what do I mean by that? Well, after we got this very clear break of Tuesday's low, a pullback here, this is a key level that I will mark with this white box, because price pulls back, it retests this key daily level, and from this point it drops lower. So this is the new lower high. It's a structural level, and from that point there I used my Fibonacci retracement tool using the bodies only, and I dropped it at the lows here. The Fibonacci retracement tool, in my opinion, is one of the best drawing tools that you can use to help you to plan an entry for trading. I created a video that goes into detail on what the Fibonacci retracement tool is. Fibonacci isn't restricted to just trading, it's present throughout the whole of nature. It's a very powerful system, and it applies to the financial markets, believe it or not. These three lines in particular represent the optimum trading entry. So if I am looking in this case for a short, these would be the best place to go short. You can use the Fibonacci in the other direction and use those for an entry long. They are the 62%, 70% and 79% levels. And the theory is that price retraces between those levels. So let's take the middle one, the 72% of this leg, this movement down, it retraces most of the way back up. And then that's where it can find momentum to continue on the trend, in this case lower, breaking the low here. That's my trade plan. And that's why I incorporate the Fibonacci retracement tool. And for this, I had an order set just below the middle line. So it's an average entry point at 1.3214. Once again, to recap the reasons for this trade, on the daily time frame, which is the highest authority time frame, price is down. We're in a downtrend, moving lower. So I want to follow that, and I want to look for shorts, I want to sell. On the 15-minute time frame, we have broken a key daily level. We had a really nice pullback and a drop down. This provides a beautiful piece of price action that I can use to apply my Fibonacci retracement tool from. I used a 15 pip stop, which placed my stop out level just above the structural level here. Let me zoom in. There are many different ways that you can calculate your stop loss order. In this case, I use a structural point. So I wanted my stop to be above this little structure here. I wanted it to be above the high of the day. And if you zoom in right here, just before I get into this trade, we get a really nice bit of price action, which is why I got into this trade as well. What I'm talking about is the fact that on the current day, we are pushing higher, making higher highs and higher lows. not breaking the previous bodies. Price pushes up, and into this area of the Fibonacci, we have this bearish candlestick at 5 o'clock in the morning. It's a bearish engulfing because it engulfs the previous candlestick. Price comes down. We try to push back up and we get another bearish engulfing candlestick here. So this is a change in behavior forming, meaning that bears are starting to take control. That's why I got into the trade, and I wanted my stop to be above this pattern here. For my take profit, I was aware that I could have aimed for a larger take profit. I could have aimed all the way down here for the structure for a break of the previous low, which would have given me a nice 4R target, 4 times what I was risking for the trade. But as per my personal day trading strategy, I aimed for a 1.5R target. I aim for short winners because I don't want to hold my trades too long. I like to get in and out of the market. It reduces my exposure risk. In most cases, I will take 2 half-size positions and I will have another trade running that captures more profit. In this case, I'm trading a little bit differently because recently I have taken on a few losers last week. So now I am going through my process for bouncing back. And I'm going to talk more about that in next week's video. So make sure you're subscribed below with the notification bell ticked so that you don't miss that video. And this was a really simple, really nice trade. I got into this trade again just before about 6 o'clock in the morning. Price came down during the London Open and it hit my target. It doesn't always happen that way. I was just up super early with my boys, and really nice to take a winning trade and bag $150 before breakfast. As it happens, the trend was definitely in my direction, and as the day continued, I definitely could have made a lot more money on this trade, but that is the nature of trading. If you are a beginner to day trading Forex, if you want to learn more, I have launched an ebook at the beginning of the year, Forex Trading 101. It's a complete guide for beginners, introducing the key concepts of trading the Forex markets. There's a link below in the description, do check it out. If you've been following my journey trading with the prop firm, the 5%ers, I mentioned that I passed their funded program in 2024, and I'm currently enrolled in another challenge, the high stakes challenge, in an attempt to pass the high stakes program and trade a $20,000 account size. And now I'm going to talk a little bit about that. So the week before half term week, I actually managed to get this account up to $21,100. So I was about $500 away from the profit target. I was feeling really good and I was making some great progress. Thursday and Friday of that week, I actually had a couple of highly emotional days where I gave back about $1,000 worth of profit. I was pretty frustrated and had to take some time out from trading to just get my trading zen back in order. And that's what this is about on the chart here. This big decline was me taking those losers. This week, however, I've managed to get my zen back and I'm starting to recover the account. I'm not quite sure why it says 19 at 854 because I never went under. So I don't quite understand this chart. It doesn't match up with my broker data. But you can see in the equity column, this is the truth here, the balance. I'm currently up $300 on the account, so I'm still up and I'm still in the green, but I have taken a massive step backwards, unfortunately, from the profit I acquired the week before. Again, this is the nature of trading, and the hardest thing about trading is when you go through these losing streaks or these emotional experiences that we can often experience, even our experienced traders, it's how to bounce back. And I'm going to talk about that in my next video. I'm going to give you 5 tips on how to bounce back from a losing streak so that you can ultimately carry on trading and not give up like so many people do. One of the things I love about trading with the prop from the 5%ers is the fact that they give you an unlimited amount of time to pass the program. So I'm not stressed out that I need to hit the profit target to buy a certain time. Although for me, I kind of have a biological time of hopefully passing before my baby's born. But we'll see how we go. At the moment, I'm making some good progress and I'm just trying to relax into the process. If you want some more information about the 5%ers, I have created a separate video comparing the high stakes program with their bootcamp program. They also have the hyper growth program, which is the other program that I passed. Meanwhile, if you have any questions, leave them below in the comments. Please remember to like the video if you've enjoyed it so that I know to make more videos like this, and make sure you're subscribed to the channel below, and I'll catch you in my next video. Thank you for watching. Bye.